Mess with fire, now it's closing in. to bear and nothing to win, nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Step in the fire, take my hand. I'll take you higher than you've ever been. You've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing you the accurate predictions and not wasting a single second of your time. Bada bing, bada boom, we go into the charts. Well, as it looks, we got that rejection off of the resistance. We talked about 3 hits to the high and starting to come down. This is the pitch fan 0.65 region that we've been banging our head up against as we make our ascent in this ascending channel manner. You can use this regression trend tool to see that we're following the line quite nicely on this mean reversion path to the upside between the 0.65 and meandering just below the 618 and holding this 618 mean reversion path to the upside of the pitch fan. What is a pitch fan? Well, it uses a impulse retrace idea to point a mean reversion path in both directions if you're going lower and rejecting off that and heading down, or heading up in this manner. And we've saw this ascending channel hold since January, so we've been just leaving this here on the Coinbase chart just to take a look at it. I used to use these pitch fans back in the day. There was a time I found a deviation that worked pretty well, and it was following it to the 706 region and knowing these fatigue points. So as it stands, we're starting to see that we're at this premium range. Are people offloading positions and distributing in a manner to come down to the 0.5 equilibrium and possibly down below to the 382 or 286? Who knows? Let's go look at the liquidity and create a narrative on high block. So what is high block? Well, people leave their liquidity in the charts to get burnt to a crisp by the market maker for not using a stop loss, and we get to see where those liquidated people lie in wait and or burnt to a crisp. So let's go into the 1 minute time frame and see where they lie. So as we were breaking out here the other day, some longs were opening imbalance to the shorts up here in the amount of 139 to 45 and 113 and 141 to 56. So there was more longs opening to shorts as we entered into the resistance and liquidated these characters over to the left, and so they started to retrace into the 100x as they like to do, and continued on into the 50x last night as the Americans celebrated 4th of July. So as we are coming down here, we're also seeing more shorts opening to longs. We have 99 million and 117 million to the 80 million and 29 million in longs as we drop down here. So retracement possibly up into the 30,943 to take out these 100x pools before continuing lower. If we continue lower, would be ideal to see. Creating these rounded tops as these inducement traps to stop out the maximum amount of shorts before heading in the direction they aim, which is to the longs. And conversely, with rounded bottoms, they trap the most amount of shorts while stopping out the maximum amount of longs before heading higher. So the rounded top scenario is what you'd be looking at here. And as you look at this, they are coming possibly to grab some of these guys as they opened into the drop here. So coming into the 100x pools, 117 million to the 70 million. So there is an imbalance to shorts to longs as we speak, but there's a thicker band down here that they could be aiming at 30,361. So if they stop out some of these shorts, they could be making another stab down in similar fashion here. They stabbed up to stab down, they go up to go down, and they go down to go up. As in similar fashion, they go down to go up, they go up to go down. So these kind of stabs give you the impression of where they're actually heading. Okay, so let's expand our vision to the higher time frame of the external liquidity pools. Shout out to everyone here. Booyah. In the last 12 hours, there's more shorts to longs pinged in. I really don't like this 12-hour one. I don't see the point of it. But let's go on to the 7-day. On the 7-day, we still have more imbalance to the upside here on the 31,700 region that we were painting a target on the last time we were up here, thinking that we would come to clear this range, which we did not for whatever reason. And let's go to the monthly. The monthly also has these characters. We painted the story for you up in the 31.7 region, now approaching 42 billion at 31.7 from 31.6 and 31.7 combined, and their 31.5 is another 12, so that's a $50 billion pool on the monthly time frame to come up to at some stage if they were so inclined. So what you'd want to see is a come down into stop some of these 50, 100x characters kind of refuel off an order block and possibly go up to this region again. Let's go down below. You have the thicker pools holding you down, as well as some in this region, double digits in the 28K range as well, still open in profit. As you approach the 3 and the 6 month time frame, you notice the imbalance starting to form to the downside here, and seeing less liquidity above than below, and more insinuation of pulling it down. If you go to the 6 month, same story applies. You have $100 billion pools plus at the 24.6 region. This is what we put the Bart Simpson idea out for, because they would skip this because they have no interest here. Their interest would lie down here, so they would just Bart Simpson down to grab it once they satisfied their appetite up above. So that idea is not out of the question. In a similar fashion here, they went down, spiked up, and then Bart Simpson down here. So that could be on the cards if you come up, grab some of the liquidity, spawn some divergence, and then come down off of that. On the 6 month time frame, there is more below than above. You do have on the higher pools, you have 100 billion up at 32.1 and nearing 100 at 89 plus, all the way up to 33.6. So the narrative for higher time frame pools is there to continue higher on the 6 month. If you go to the 2 year, that's where you also start to see the external pools look quite juicy. We've been talking about this 450 plus. It's now 470 or so, up at 33.2. So this entire region has 165, 145, and 156 million dollars or billion dollars respectively up at the 33.2 region that we could come up to and spawn some divergence off of. In similar fashion, we did that down here. So we grabbed a few $100 billion pools and peeled out from 24K. So we left this 24.4 on the table for whatever reason, assuming it's a market maker position of some kind that they just leave unscathed like that. So those positions were left untouched. Same here, if they come up to these regions, where is the untouchable position for them when they come up into this pool? So overall, more bullish than bearish in terms of coming to the path to the upside if they come up into these regions. Once they clear them though, you can look for a retrace without having to pay as much, I would imagine. So they would come back and retrace into some of this liquidity down below, and these pools at the 24K region being mighty thick too. Okay, so let's go back to the monthly time frame. Seeing this stab up to the 31.7 in a conservative manner would be ideal. Seeing this $100 million pool of shorts get rocked at some stage before coming slightly lower to take out some of the 50x perhaps, testing these lows at 30,361 perhaps. So coming up to go down, and then Thursday time starting to see a reversal off of the 30K region perhaps. Could be a narrative to form. Let's go into the Binance chart, take a look at some momentum indicators. So we did not hold that 236 level, so that was your signal in terms of talking about the 3 hits to the high idea for taking profit on the long and looking at setting up on a potential scalp short. This is the power of 3s. We were talking about coming up into this region. We said this 2, and then this was your 3rd hit to the high. So you have these 3 hits to the high, and then you sharply reverse. So possibly coming back to recover this wick on the hourly time frame at 30,141. 30,141. Would put you down in here, taking out this band here at the 30,000 band here. That makes sense too. The thickest region is down in this pool here at the 29,663 region. You do have that 335 that they left, 365 that they left up at the 31,536 region that they could come back to on midweek reversal on Thursday. So coming down to that is interesting to note. All right, time to throw on the oscillators and see what's up. Boom. Link in the description for more. Scroll down to features. You can see everything in its glory. Read about certain indications we have, components within the suite, and momentummaster.info. So as we are seeing right now, we had 3 time frames overbought with the baselines above the price on the hourly time frame, crossing down, confirming and locking into position. We came off the cloud, got a little bounce off the cloud a little bit. We had a B wave and then saw ourselves to the downside with the ABC. Boom, boom, boom. And are we starting to see another ABC within the ABC? So this is beneath the cloud. If we look at the 4-hour time frame, 4-hour cloud bounce idea was in for that kiss to the cloud and bounce out off of the cloud exactly, thinning but not really getting the follow through. The volume on this not so thick just yet, so coming back down beneath that cloud could be en route. We do have the cross down event on the 4-hour confirmed now, so this could be a downside path of at least something to this nature. A 2% drop on these cross downs and cross ups is all you ever need to pay the bills. So having this cross down confirmed shows that we could be seeing some more downside pressure. All right, let's start our daily descent. So we'll go up to the daily time frame. I think a 5-day candle closed, if I'm not mistaken. If we still have that daily cross down event that we're battling against, so we came up and got that pressure off the daily cross down. So this daily cross down is still intact in terms of bringing us down here, potentially speaking. The daily time frame stochastic is also coming down in a nice manner. We did bring the Williams and its average to an overbought status, so if it starts to come down here, you will get an alarm at some point letting you know that this suppression on the daily could be inbound. Also, the 3-day is getting overbought as well, so if we make our way to the 3-day, which closes in a day, you are overbought on the 3-day. The money flow is starting to come above the RSI here. Not overbought on the RSI or the money flow just yet, and the Williams does have room to meander for another 9 days or so. The last time we did stay in consolidation before going up, we did that on a 3-day chart for 22 days, if I'm not mistaken. So this is 18 days. So there is no ability to just here's one. So we consolidated for a good 42 days in that region, and then that Williams came up to its average for during that time. So there's no guarantee that we will go higher immediately. We could just be in this range for 42 days. So I told you back here when we first ranged here, like, there's no immediate gratification guaranteed. This could be just straight range trading for 20 days plus, so we could be in this region for a long time. So be prepared for that. All these baselines start to come up above the price and start to give you this possible cross down event as well. So this Williams needs to come up to its average a little bit more on the 3-day, considering we could go sideways on that. The 5-day did close out. We were right. It closed out with a spinning top. What is a spinning top? Well, that you have a wick on both sides and a short, stout body like a top, and it expresses an indecision on both sides. Possible reversal. You got the baselines coming up to beneath the price here, so the 5-day could take you up if we do have this money flow beneath the RSI start to pop up a little bit. We had previous money flow and RSI divergence on the 5-day, which is what brought us out of this region. The cloud is tapering in a manner here, but still mighty thick on the 5-day. Look at that bounce off of the cloud on the 5-day time frame. We broke through, we came to the 618, bounced directly off that cloud on the 5-day. Alright, so let's go to the weekly just to see where we stand in terms of resistance. We're starting to meet with some possible resistance on the baseline here. So this baseline coming up above the candle here is the price action. So if we come back down beneath this, this could be another suppression possibility of this cross down event, at least to a retrace level where we start to build another narrative on the daily time frame. A lot of times you do get that suppression of the takeoff on the 50 level of the stochastic RSI, similar to here, where we start to come up and you get rejection off of that 50 level and then come down. The one bullish thing is that we closed a weekly candle above the adaptive and the weighted on the weekly time frame. So this is a reclamation of some true support ideas for this stochastic to come to fruition all the way up to the 32K region on the weekly time frame. If we head to the 22 and start to make our descent through the levels of the 22-hour time frame, the 22-hour is starting to reset here on the stochastic. The money flow is still above the RSI, suggesting we could come down some more. The Williams also needs to come down for me to enjoy the entry more, possibly coming down to this ATR level and recovering this wick would be a better true support. This is what I was pointing out at some stage over the weekend, is coming down to recover the wick of that buyback would be a true test of support, because that V-shaped recovery is not genuine. It seems more like a liquidity grab to that side and now a liquidity grab to this side, and so now we're going to test true support and see who gets trapped in the process. All the bulls that want to buy and are quick on the trigger might be the ones that get trapped now as we head down to test true support on the wick at 29,643. 22-hour time frame momentum to the downside for the reset completion could be inbound for this day of Wednesday, and then setting you up for Thursday midweek reversal with this reset would be nice. And if we go to the 12-hour time frame, whoa, 12-hour time frame meandering on takeoff here, could come back down here. Williams ambiguously holding an overbought level. The money flow that was previously beneath the RSI starting to come up to a more reasonable level of disparity. This could bring the RSI down to an equal 50 level, as well as keep this within a region here where it could come down further beneath the 50 level and suppress the 12-hour down to the level we're talking about, wick recovery at 29,643-ish. If we go to the 6-hour time frame, it is now overbought too, coming down in a momentous manner. Does this cross down event confirm in the next 5 hours? You will find out. If we do close some candles beneath this level we're at currently, which is at 30,777, then you will start to see this baseline start to confirm the cross down on the 6th, and the cross down events do eventually play out. We did have some meandering around here, but when you had the cross up here, you started to see upside. So if we start to see cross down, we could be seeing some downside for there. The cloud thickness still not as thick as you'd want to see it for an upside play. It looks like a liquidity grab play. You have the 3 hits to the high idea coming down into that 29,643 region. This was a previous liquidity pool we had on the wick here that they could come back to, some 100x pool of 200 million plus. So coming down to recover this wick could be an idea to test true support and trap longs on the way down. So a lot of Discord groups are putting out, oh, you have true support at 30,003 or 30,004, like, and so people would be entering their longs, providing the cushion for a pain of packing the bags down lower on the wick recovery. Just a thought, just spitballing as we go, as the potential cross down events start to display themselves. What are the cross down events? Well, you go to the baselines and read about it. It's your first sign of reversal. So we have that on the 4 hour, which we'll get to now. So we had this cross down event confirming, giving you the idea of this coming down. And so coming down to test these wicks off of these levels to see what the true support is like. Could be inbound. All right, so if we go to the 4 hour time frame, starting to get reset here. You still have about another 6 hour candle. Pardon me, I just sneezed. So if yeah, you round this out a little bit and bring the Williams down some more, cross down on the MACD, so could suggest the Williams suppresses you here on the 4 hour time frame. Ooh. Cloud is not as thick as you'd like to see for upside, although it is trying to provide a bounce here on the 4 hour. Not necessarily sold on it. Rounded tops start to trap that liquidity of longs, building the pools before they stab them. Hourly time frame also getting suppression, possibly. You are getting that oversold status on the hourly time frame, hence why you're seeing this 3 here on the stochastic array, starting to round out the baselines beneath the price, but getting a possible sell-off wick as it traps the liquidity on takeoff. Coming back into some of these pools that they've built over the weekend would be a nice test of support. You had these V-shaped pools that got paid quite nicely, so the people that are still open, they can come back to them and say, you know, you should have paid yourselves, and scare them out. And try to trap some more in the process. So normally you have false move Monday, so in this case the false move for Monday would have been the upside, and then Tuesday, Wednesday is going to be this downside retrace, and then Thursday midweek reversal would insinuate continuing higher at that time on Thursday. I don't know how the progression of the week works with holidays, but generally you have that pattern of Tuesday complementing Wednesday, and then Thursday midweek reversal, and Friday run for profit. So they could start the reversal on Thursday and then surge it on Friday perhaps. So as it stands right now, you're still having the cross down event for the hourly holds you quite nicely. If you just play hourly cross ups with coinciding that with what it gives you, and then getting out before the cross down fatigue kicks in, you'd always get a little bit of something on these cross ups. You know, a little 0.5% there. If you sell off into momentum, or at least trim into momentum, you'd be good. So if you follow this until it starts to scoop up the price, and price closing candles beneath the hourly baseline here, once you start closing some candles above this baseline and holding it, ideally if you're starting to make a narrative out of here, you'd want to see a double bottom of some kind, and then you get off on that double bottom. And then so this ideally having like a C wave that goes lower than this and kind of goes into that level, and kind of liquidity grabs more beneath the range, and looking at some lows to the left and seeing that confirm as support is where you'd be trying to build a narrative structure out. But getting it on this first one is riskier because it's not a double bottom. You just would love to see double bottoms. Like, okay, let's just go to a different chart and then show you an idea. So essentially you want to see kind of like a double bottom formation, and then you have the entry and you're out. Okay. I mean, even coming down to there. So we're gonna just give you a little bit of some cool stuff going on here. So whatever you want to call these things, it's basically the same thing over and over again. You just have, it's the thing that's in my loading screen, the dragon, it's the head and shoulders, it's whatever you want to call it, but you have basically the same thing displaying itself over and over again. And you have these simple double bottoms, and you can get it here if there's some divergence that plays. You can find the entry model on this idea, or you can wait for the retrace into the 618 for a bullish order block entry here. And these type of things are what you would look for a reversal, true reversal. So getting in here is kind of risky because they're trapping more liquidity to getting people to DCA so they can liquidate them. And then seeing an extended low like a lightning bolt, seeing this kind of lightning bolt to the downside is where you can get in here off some divergence, or you can get that retrace into the golden pocket out of there too. So there's two safer entry models than taking something like this. All right, so that's kind of what you want to see in terms of that. And yeah, there's that retrace, and that appears on smaller time frames as well. Like if we go back to let's see, like if you look at the Momentum Master website, that's essentially what is going on here. Okay, so this is the Bitcoin's local bottom. You have bottom, double bottom, shootout, and then here we held the range, and then we continued without going to the 618, but we brought the cloud up to it and we were gone. And this is shoulder, head, and shoulder. So this type of pattern you see, like this, I didn't know this was the bottom for Bitcoin, but it ended up being the bottom because you had this double bottom within a double bottom. You had the double 1 and 2, and then you had this fake out double bottom within a double bottom, and you had these shoulder, head, and shoulder. And this idea is what you see repeated over and over again. So if this is definitely not something you would look at for a long idea, you would look at something to come down into this level if this were truly a bottom, and you would see, you'd try to find some sort of double bottom out of there. Since it's attempting to hold here, this is likely a run at the liquidity, which is, we already pointed out, at 30,943. So 943 would put you up in here. So they basically go up to create the first leg of a double bottom and then possibly go up from that point. I don't like to make it so dramatic. Come on. I like to make it insinuate, like it goes up and then goes down here, and then how high up does it go from that point? I don't know. But you could have a run on the liquidity per Hong Kong likes to do. Hong Kong normally takes it up before fading it into New York. New York would put you around this time, and yeah, they fade it into New York. And what does New York do? Go sideways and take it a little bit lower. So in the interim, it looks like you're having this money flow beneath the RSI here. Looks like you're trying to scoop up the price, at least to run up into the 100x pools here on the shorts, to that top of that range, the 117 million there. Not my cup of tea in terms of a scalp, but you could go up, because I can't monitor it. I won't be around to monitor it, and you have the cross down of the 4 hour working against you. So this, like I said, this is probably a liquidity grab before heading lower. So on the 4 hour time frame, you could be getting some more downside here alongside the 6 hour. So the 6 hour wick here on this candle could be a nice double bottom if you come back and create that divergence and confirmation here and hold this range of this wick. So personally, I'd like to see this come down all the way to 29.6 and the bottom of this Keltner channel, and yeah, confirm it as support at the bare minimum. And yeah, so to wrap it up in a nutshell, you have a thin cloud on the 4 hour that we're attempting to bounce off of, but we got the cross down event intact, and you got a little bit more on the stochastic to come down with the Williams possible suppression of the 4 hour. The 6 hour inbound for a cross down event. If we close out candles beneath this level we're at currently, it will confirm a cross down on the 6. We have been seeing some fake outs on the cross down event as we hold this range, so something to notice anyway. If you have the 8 hour also confirming a cross down event alongside the 8 hour, still has momentum to the downside. 12 hour cross down still intact alongside the 22. The money flow has flowed up and we've gone sideways, so the disparity between the money flow and the RSI on the 12 hour is losing steam. And if you go to the 22 hour time frame, the 22 hour is coming down in a momentous manner that could, with the baseline cross down in it intact as well. So this could spell more downside to recover the wick at 29.6. Yeah, so personally, I would like to see a retrace down to the downside here. The 15-minute getting more rejection off the cloud as well on the 15-minute, seeing this potential. So as the Asian range starts, Hong Kong normally likes to pump it a little bit. If they intend to fade it, they bring it up before they bring it down. So you could see this bring up to come grab some of the shorts that opened late here once again on the 117 million at 30,943. So bring it up to here and then start to fade it down into London's time. And then what does London do at that time? Seeing another leg down to the lows here, that would bring you to this level at 30,570. What happens there in terms of a reaction to New York, we'll keep you posted. That's too far in advance to predict, so that's what we're seeing on the radar as we speak. And that's my story, and I'm sticking to it, folks. So thank you for coming on in, and thanks for coming on in and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in, and we will do the same, bringing the fire, the precision, the accuracy, all that fun stuff, and we will catch you on the flip side. Peace.